Hi everybody, Jared Johnson here. Let's have a look at the stock market this week. There's a lot of crazy things going on. So much to discuss. Let's talk about what we're doing here at Union Hedge Funds, how things are rolling along, where some of our time and energy and attention is being focused. So let's see how this plays out. I want to talk, I feel like I've done this before, but I want to talk specifically about one stock in general that I think has some interesting elements. Love or hate, agree or disagree. Let's have a peek. Let's go right to the charts here. Let's see what we got going on. It's my good friend Tesla. Tesla, we've talked about Tesla a little bit. I'm just getting more and more interested in a Tesla play. Now, let's make no mistake about the fact that there's two wild cards for Tesla, right? There's two big wild cards. Number one, Musk steps down. Now, some people might say that's actually a positive. Elon Musk is crazy. Maybe you want to say that, maybe you don't. But I think that his craziness is his biggest challenge and his biggest benefit as well. So Musk stepping down would be, I think, horrific. Number two, dying. I don't know, leaving this planet. But I think if Musk steps down, Tesla becomes any other EV, and that's not good. Remember that, he's got a lot of energy and attention focused elsewhere on Starlink, specifically on SpaceX and making some stuff happen there. So if there was a point where Elon Musk said, I'm going to just focus on SpaceX and we're going to get another CEO to run Tesla, I think that would be detrimental to the company. Maybe the company would act excited about it, but to be doing anything exciting in this space, you have to be crazy, and Musk has plenty of craziness. And so I think I think that's kind of something to keep in mind. Again, I'm not making a trade recommendation, but I want to just discuss a little bit of where I think there is some interesting opportunity here. Tesla is a stock. The last time I bought Tesla, I had a behemoth play in January in my hedge fund. My fund administrator reported this. The results of everything. January was a big month for us, January 2023, and it was mostly due to the fact that I bought Tesla. I bought Tesla at like $110. So if you can see my mouse over here let's go over here just a little bit. I bought over in this space here, and it was a great play. It was a great play. You can see that Tesla went from we had a low here of about $102. It ran up pretty quickly, about 110 or so percent, up to about 215, 220, somewhere in there before it kind of topped out and we started really kind of feeling, the divergence of Tesla with everything else. So Tesla is interesting in that space that when it has these big dips, it does tend to do something pretty significant. Now, I want to give a shout out to my fellow stock market analyzer out there, Charlie Bolello. He's got some great stuff. If you haven't followed him on Twitter, Charlie Bolello on Twitter, X, whatever. And I think that's a super interesting play, is to look at some of these statistics here. Now, as posted in this chart, you can see Tesla, one of their biggest drawdowns was September 2014 to March 2017, right? This was a 939-day drawdown. Now, by drawdown, we mean it didn't take out the previous high. It took 939 days to take out the previous high. Now, this is not trading days. This is calendar days. So remember, there's only about 240 trading days in a 365-day year. So it's not quite as long, but definitely a couple of years. And then once again, from September 2017 to December 2019, we had about an 820-day drawdown period. And right now, we're sitting at about just shy of 900 right here. So this is kind of an interesting spot. Somewhere around the 900-day mark is when Tesla goes, into major drawdown. But it seems to kind of recover around that space. Now, there's a ton of different surrounding circumstances. We know that. That happens, that can happen in, 8 or 900 day period. But just kind of look at this right here. If you look at this chart, here is, I'm just zooming this guy out just for the sake of effect here. This is a high of November 2021. So this is our high. This is about $415. And Tesla is currently about 65% off that high. And you can see right here about 897 days since this high. So we're right back at that 900-day mark. I think that's interesting. I think there's definitely some interesting possibilities there. Does Tesla come and revisit this low right here of January 2023 before it had a quick 100% rally, or does it go lower? Does it surprise everybody and break $100? I don't know. But what I'm thinking, just on kind of my own personal space and my own personal money, maybe not hedge fund money, but my own personal investing, I'm thinking about the idea of just starting to dollar cost average into a Tesla position. Just saying, okay, I'm going to buy X amount of Tesla every week or every month. Now, one thing to keep in mind, Tesla, this video was made on April 22nd, and Tesla has earnings on April 23rd after the market closes. So we got a little after hours earnings there. So, this picture could be very, very different after earnings tomorrow. Tesla could be at $100, and Tesla could also be at $160 or $70 or $80, or it could just be right where it is. We don't know. Earnings could shock. There is tons and tons of bad news on Tesla. Between layoffs and Elon Musk's payment package or his compensation package, China, factories, plants, all kinds of different things. There's a lot of wild cards here. But one thing that I love is that sentiment could not get too much worse on Tesla than it currently is right now. And I really love when sentiment gets super lopsided. One thing that I'm kind of peeking at, along with some interesting charts here, right here we have price to free cash flow, right? This white line represents Tesla's stock price, and you can see pretty steadily since 2019 or so, free cash flow made a real big run up, right? And then it's been making this big run down, but it looks like it might, we'll see. Where this quarter was better than the previous quarter. But you can see that the stock price is running opposite directions. So we have this opposite run on stock price going down, free cash flow going up. All we hear about is tons of debt, tons of, everything. Nobody wants to buy Teslas anymore, so on and so forth. But this chart kind of tells a little bit of a different story. Tesla is, gaining on the free cash flow, but the stock price is falling off a cliff. And this, leads me to believe there's a little bit of a sentiment game going on here. Yes, we can look at numbers like, how's the PE ratio, right? We see this kind of thing, and our PEs can go pretty wild, right? If we just look at the last 12 months, you see that PE ratios come down like crazy, down to a pretty reasonable level, considerably speaking here. If we look at our PE ratio for the next 12 months, it's a little less wild, but it's still, we're still up in that 51. That's a pretty high PE. It's trading at 51 times earnings. But, people have paid 400 and 300 times earnings. So 51 is pretty historically low when it comes to PE ratios. But interesting to see stock price going down, PE going down, free cash flow going up. I just look at all these and I think to myself, is there a play, especially if earnings come out terrible? I actually really want earnings to drive the stock even lower. I would love to see Tesla at $100. That makes it a really a no-brainer for me to just start buying in. I'm not trying to call the bottom. I'm not trying to get a quick turnaround. I just want to start gaining exposure, probably through shares of stock. I don't know that this is an option play. For me, individually, personally, I think that I want to just buy some shares of stock, some small amount, on a weekly or monthly basis, and just pick up more and pick up more and pick up more. Now, you might say to yourself, hey, there's other stocks that could go up 100%. If Tesla goes up to $300, that's 100% gain. Great. There's a lot of stocks that could go from $10 to $20 or, thereabouts and probably happen quickly. But Tesla is so heavily watched. It's so heavily traded. There's such a story behind Tesla that I think, can react a lot more quickly. We've talked a lot about China. China had a great day today. We've talked a lot about these different stocks, but I think Tesla, because of how heavily watched it is, and because of also how much there's still this push towards, EV. I know that EV's kind of fallen off a cliff a little bit in general. A lot of the car manufacturers a year ago were saying everything will be electric, and now they're like, maybe hybrid, maybe not electric. But Tesla is much more than an electric car manufacturer. I think Tesla is going to be able to really change the self-driving, the AI in cars, the car technology game. If we look at what's going on with cars now, we're still using old technology, like really old technology. And if there's anybody that's going to break through that, I think it's Musk. I think it's Tesla. And I think that there's some bigger play to be unraveled there. And I don't know. I really like this Tesla scenario. So buying in on a weekly or monthly basis over the next 1 to 2 years, I think, has a lot of promise for me. So I may be doing something like that. But let me know your thoughts. I want to hear your thoughts, your comments. Leave them below. Reply. Let me know what you're thinking. And keep in mind, I'm looking at a larger time horizon. This is not a this week, this month, this year play. This is a long one, and this is slowly putting on exposure and giving it time to play out. So let me know your thoughts. I'd love to hear it. Good luck, everybody. Have a great week. There's a lot of things happening this week, and I'll try to keep you updated, but I just really wanted to talk about this one in particular. We'll see how earnings go tomorrow. Good luck to everybody. Happy trading. See y'all soon.